The International Monetary Fund is, I think, best understood as a cooperative which can give credit to members which require credit, and which also, as part of that, dispenses financial advice. Let me go through the periods of the fund's history in turn. First of all, the period from 1946 until 1971 was really the only period in which the fund operated as it was designed to operate at the Bretton Woods Conference. Then it was the policeman of a monetary system which depended on fixed exchange rates. The second period really follows from 1971 to 1973. The fixed exchange rate system broke down and the world economy was hit by enormous shocks, in particular the big oil price shocks. In that period, the fund did a lot of adjustment programs, but it really didn't have a concept of the system as a whole. And the main intellectual work of the fund at that period was working to a new kind of definition of what the international monetary system was about. A debt crisis broke out in Latin America, started in Mexico, but very, very quickly affected Brazil and Argentina. And then the fund definitely had a mission. Its mission was as the manager of a debt crisis. And it was a very, very dangerous moment because the debt crisis also threatened to affect not just the emerging markets, but also the rich industrial countries. At the end of the 1980s, it looks as if there's a good way of dealing with debt crises, and that part of the fund's history, as it were, is over. And then comes the fourth period, is really follows immediately from the collapse of, first of all, the Soviet satellites in Eastern Europe, East Germany, and then the communist rule in Hungary and Czechoslovakia. Poland disintegrates. And there's a need for both fund advice and for financial assistance in terms of restructuring formerly planned economies, formerly communist economies, as they transition to the market. That's really one of the great successes in the fund's history, but it's then followed quite quickly by the emergence of a crisis in East Asia, and that in 1997, 1998. In the 2000s, the fund history looks rather different because it looks as if the world economy is developing very successfully and globalization is integrating more and more countries and credit is flowing very freely. And then the global financial crisis hits. The fund is really put in the center of managing the crisis and dealing with the crisis. The IMF is really very relevant today because we're not entirely out of the aftermath of the 2008 financial crisis. The financial crisis hit first the United States, and people thought it was an American crisis in 2008. Then they thought it was exclusively a European crisis, and now we're seeing that there's really a problem of emerging market slowdowns, and this is more of the classic type of crisis that the fund was used to handling. The critical feature of the IMF, I think, is that it combines the capacity to offer financial assistance with a substantial technical expertise, and so it's that combination that makes it unique.